Hello everybody, welcome to a collaboration video with Trader Merlin and barchart.com. My name is Merlin Rothfeld, host of the Trader Merlin Show, which is a live daily show on trading and investing every day, Monday through Friday at 2 p.m. Pacific time. You can find that on YouTube or at tradermerlin.com. Now, in this video, Barchart said, could you do something on Bitcoin? We'd like to talk about the future of Bitcoin, and lo and behold, why don't we just get things started and talk about the future of Bitcoin? Now, I know many of you may hate Bitcoin and think it's the worst. Some of you think it's the greatest thing ever. The reality is there's some happy medium there that I think we can all agree upon, that it's an innovative technology that does have some opportunity and potential for the US markets, etc. Now, before I dive into my price forecast and all the technical analysis side of things, I want to make sure that you all have a chance to understand that this is a very risky asset class. I would argue it's probably the riskiest asset class that you're going to get involved with in the world of trading right now. So be careful, read this disclaimer. We are here for educational purposes and information only, to show you maybe a perspective of some of the technology, utilization, and some factors with regards to Bitcoin that you may not be aware of. So be careful, understand there's a lot of risk here, and we are not responsible should you make trades in cryptocurrency and digital assets and take some losses. Do your own research, do your own homework, and make sure that you have a plan in place, because you can lose money. Now, before we dive into the nuts and bolts of it all, to understand where I think Bitcoin's going to be going and all the factors driving that, because current market situation is dictating where that's going to go, we have to understand where it came from and why it was created. So Bitcoin, we'll start with the creation of Bitcoin. Now, back in 2008, some of you veteran traders may remember, we had a significant financial crisis here in the United States. There was a period of time where banks like Wachovia and Washington Mutual, they had a run on the bank, and all of a sudden those banks went under. They went into receivership, and the FDIC took them over, sold their assets. And wait a minute, am I talking about 2008, or am I talking about what happened just a month or so ago here in the United States with First Republic and Silicon Valley Bank? And all of it seems like it's happening all over again. So the reason I started here, which is much more of an educational approach, is the white paper, which was written by Satoshi Nakamoto back in October of 2008, outlines this peer-to-peer electronic cash system called Bitcoin. And the reason for it was banks were not allowing you to access your accounts. Banks were freezing accounts. Banks were uninsured with deposits over the FDIC limits. So all of a sudden that money just disappeared. And wait a minute, if it's my money, why are you telling me that I can access it or not? It's my money. So Bitcoin arose mainly because of that, a way for you and I to basically be our own bank and custody our own assets and not be part of the fractional reserve banking system that we have here in the United States. So again, a peer-to-peer payment network that removes the banking equation. Take banks out of the picture, and now if I want to send any one of you money, I can do so electronically for as much money as I want without a bank, a wire transfer, or somebody saying, hold on a second, why are you sending that? You don't have access, we're limiting your withdrawals. That's what banks were doing. So that's what the white paper was really designed to, I guess, convey to the public about Bitcoin. But there's a bigger looming challenge here, and that is the US dollar. The US dollar as a currency has performed very poorly. Now, many of you know that one of the requirements for the definition of money is a store of value. If we look at a price chart here of the value of the US dollar going back into 1913, when the Federal Reserve was created, you'll notice a very sharp decline in the overall wealth of the US dollar. Since FDR took us off the gold standard in 1933, the US dollar has lost 97% of its purchasing power. And let that sink in. 97% of the value has just deteriorated out of that dollar. And the main reason for that is the printing of money. Now keep your eye on the bottom of your screen, bottom of the dollar there. I'm going to add in M1 Money Supply. This is an exact copy of M1 Money Supply from the FOMC's website. And this should be jaw-dropping. I know it may not seem that interesting right now, but money, M1 Money Supply is the amount of physical dollars or cash equivalent deposits in banks in the United States, or just dollar deposits in the US. That's cash money. Now, of course, as economies grow and businesses grow and environments grow, yeah, you need to increase money supply. But look at that curve. From 1913 all the way until 2020, it increased all the way to a max of $4 trillion. You can see on the right-hand side there. And then when COVID hit, we went from $4 trillion to $16 trillion in under 2 months. Let that sink in. It took over 100 years to increase money supply to its peak of $4 trillion, and we pumped in $12 trillion in 2 months. What could possibly go wrong? Ultimately, we peaked out at about $20 trillion, and many feel we're going to be going even higher than this going forward. This is one of the main reasons that Bitcoin was created, because the dollar has infinite supply, and therefore they can dilute, manipulate that dollar all they want, and that hurts ultimately you and I as holders of dollar-denominated assets. With Bitcoin, you can't do that. So let's talk about Bitcoin and what are some of the driving forces here that's going to help you understand my forecast for Bitcoin going forward. It really revolves around four things, the driving forces we'll call those. The first one is going to be the easiest, supply. That is so easy to figure out with Bitcoin. You'll walk away from this having a very clear understanding of exactly how Bitcoin is created. The demand side is also critical in driving the prices both up and down for Bitcoin. So we'll look at both of those factors. We'll look at adoption, which is the utilization on a global level. And finally, my personal favorite, destruction. And all of those are going to be factors for both the up moves and the down moves in Bitcoin going forward. So now let's focus to Bitcoin itself. We talked about supply. How is it created? Well, this is the Bitcoin emission curve, which basically outlines how Bitcoin are created. Now, blue line at the top shows you 21 million is the maximum number of Bitcoin that there can be. It's in the code, and I'll explain how that is done here in just a second. So when Bitcoin was first introduced back in 2009, there were no Bitcoin in circulation, none. The very first block of data that was created earned a reward, and that reward was 50 Bitcoin. So in a nutshell, and I'll try to keep it very brief and simple, the Bitcoin network is maintained by miners. You may have heard them. There's some major ones out there that are publicly traded like Riot Blockchain, Marathon, and of course a lot of people like myself were trying to mine Bitcoin from our homes. The miners are rewarded for every block of data that they solve on the Bitcoin network. Each block of data is about 10 minutes. So imagine back then in 2009, you were a miner, you solved the block of data because it's just a puzzle that computers are trying to solve, and you're now rewarded with 50 Bitcoin. So back in the early days, people were loading up on Bitcoin, but nobody was using this system, so it had no value. Matter of fact, in 2009, there were some transactions on the net that were like 0.00099 cents per Bitcoin. So you could have bought a ton of it for just a few bucks. Anyway, as time goes on, there's a thing called the halving. A halving is where the reward for miners gets cut in half. And as you notice at the bottom, those hash marks where it says blocks, those are all in 210,000 K chunks, meaning every 210,000 blocks, Bitcoin's reward for miners gets cut in half. So from 2009 to 2013, at the bottom, you can see 50 Bitcoin rewarded for the miners to solve a block every 10 minutes. And that means 50 new Bitcoin were created every 10 minutes. But then the halving happened, and for the next 4 years, which is 2013 to 2017, the reward was 25 Bitcoin. And then it cut in half again to 12.5 Bitcoin. And currently we are in this leg right here of 6.25 Bitcoin rewarded for the miners of Bitcoin. And you can see it's going to continue to diminish over time until ultimately in 2140, the last Bitcoin will be mined. So it's a perfect curve. You know exactly how many Bitcoin are out there in circulation, etc. So where are we now? Right here. There are currently 19.36 million Bitcoin in circulation, which means we have under 2 million left to produce. So as demand starts to increase, they're going to be chasing these fewer Bitcoin. There's less and less to be created from this point forward. And it's also noteworthy that down here at the bottom, you see where it says 840K. That means 840,000 blocks. When we get to that 840,000th block of Bitcoin, which is going to happen right around the end of April, early May of next year, 2024, we will go through another halving and the reward will drop to 3.125. Now, this is really important because what I'm going to show you here in a second is the supply mechanism and demand mechanisms, which are the drivers of price of anything. The halving is an event that shortly after the halving, several months, all of a sudden, Bitcoin goes through a parabolic move. It has happened over and over and over. Sorry, it actually has happened 3 times on the price of Bitcoin. I'll show you that on a price chart because that is critical in helping me understand what my forecast is going to be. So let's talk about the traditional mechanism for price discovery. It's supply and demand, right? You've got demand from consumers, you have suppliers, and then there's an equilibrium price. That's what most of us know. With Bitcoin, it's very different because we have a fixed supply. So Bitcoin's mechanism for price discovery is there's 21 million of them, period. That's all there will ever be. They're not going to make an elastic supply here and accommodate more people into the system. That is a big thing for Bitcoin. So if we look at how demand impacts it, let's say that this is our current demand curve and you can see the dollar sign there where the red horizontal line is, and let's say that's current price. But let's say somebody like Elon Musk starts buying Bitcoin, or Apple parks some of their $51 billion in cash in Bitcoin. All of a sudden, that starts to shift demand to the upside. And since supply is fixed, that demand could have a profound impact, and all of a sudden we could start to see prices rise faster and faster and faster for Bitcoin. So this is what gives it some degree of its volatility, because they're not adjusting supply to help mitigate that volatility like they do with the US dollar. So that brings us to the next step, which is adoption, meaning, are we using this? Who's going to use Bitcoin, right? We do have some countries out there that have made it legal tender. Of course, there's even a Bitcoin city in El Salvador where they have made it legal tender, and the results have been rather interesting. The adoption of Bitcoin as legal tender in El Salvador has actually done a tremendous good for the El Salvador economy, as it's bringing a lot of tourism and business as well. So adoption is key, because we need the world to start using Bitcoin more. I'm sure none of you are out there using your apps and spending Bitcoin for dinner or ice mocha frappuccinos. It's not built in yet. It's also too slow. Now, there are layer 2 networks like Lightning Network, which make it much faster to transact, and that may help facilitate adoption going forward. So let's take a look at, I guess, a loose extrapolation or anticipation of what adoption may look like. And the only reason I bring this one up is, to me, it's very similar to what the internet was back in the late 90s. But when I really was an active day trader back in the late 90s, I was day trading all of these internet companies, and I thought, oh yeah, who cares? I'm just going to make some money day trading them. If I was smarter and stepped back and look at the future for the internet and really said, hey, this doesn't allow everybody to communicate and do business and send information, and communications will be on there, I would have bought a lot of internet companies with the hope that some of those would have turned into the juggernauts, like your Amazons or your Netflix or your Googles. Unfortunately, I didn't do that. So I'm not making that same mistake now. I've got a wide portfolio of cryptocurrency that I feel may change in the future and become more of an adopted technology, and therefore drive those prices up. So I think that the internet, well, actually, I know that the internet was not widely used back in the late 90s, but now most of the world is glued to their internet, their phone, all their devices. We couldn't live without it. I think we're going to get to the point where digital assets is in that space as well. And you can see by this Blockware Solutions estimate as to where adoption may go, they're really expecting a parabolic shift in the next decade in adoption for Bitcoin. And I don't know if it'll be that steep of a magnitude. I think there really has to be some political changes that happen in order for that to happen. But I do anticipate more adoption, and that, of course, could drive the price of Bitcoin up even higher. Now, my favorite part, destruction. No, you cannot destroy Bitcoin. It's code. You can't destroy the code. However, what you can do is you can lose your access to your crypto and it disappears forever. So there's countless stories of some of these miners from back in 2009, 10, 11, and 12 who may have had 1 million Bitcoin on their computer, and they lost their computer, or they lost their keys, meaning the access to it. Once you lose your private keys, that crypto is gone forever. We could do a whole nother video on protection and security of your crypto, but I just don't have the time today. So when you think about destruction, just think that it's missing. It's in a location that nobody can access because the odds of cracking that address are not possible. It's too much infinite addresses for you to try to access that. So destruction means they've been lost. And I just like the graphic because I thought it looked pretty darn cool. So how does the destruction of Bitcoin and the amount of Bitcoin being destroyed impact the price discovery mechanism? So let me real quickly go out to a chart I use all the time, which is this bad boy here. And what it's going to show you is how many Bitcoin addresses have been dormant for you specify the amount of time. Because this is on a blockchain that's totally open source and transparent, we know where every Bitcoin has ever been and where will ever go. The industry says that if a Bitcoin hasn't moved for 5 years, that it most likely has a high probability of being lost. So what I did is down here at the bottom, you can see I've selected 5, which shows you 5 years, and it says the cumulative sum in dormant Bitcoin addresses. So if you see this vertical line, it's saying that there's 6.41 million Bitcoin that haven't moved in 5 years. So essentially, those are lost Bitcoin. Why is this important? Because if you look at Bitcoin itself, there's only going to be 21 million. But if people keep losing them, supply starts to drop and drop and drop and drop. Therefore, a small increase in demand can have a really big impact in the price of Bitcoin. So let's look and see what that does to the Bitcoin price discovery mechanism here. There's our 21 million based off the supply we looked at earlier, but if we've lost 6 million already, that supply curve shifts over to 15 million, and all of a sudden, notice the prices all shift to the upside because of lost Bitcoin. So that is another factor that's going to be a driver of price of Bitcoin to the high side. Now, the 4-year cycle is something that I look at all the time, and it took me a while to really understand it. I'm hoping that by the end of this, you will understand it as well and see the impacts. I am a trader at heart. I've been trading for 27 plus years. I trade stocks, options, futures, forex, commodities, you name it. If I can find a way to capitalize on price movement, I'm going to trade that thing as long as the risk fits my reward. So with the 4-year cycle, I found this pattern, and just by playing with charts over and over and over again, that repeated. And of course, there's not this infinite history like we have with some of the major equity indexes, but I do have data going back to 2009, and that's where we're going to start with this one and show you the 4-year cycle, and then I'll get to my forecast for the next few years. Here's Bitcoin going all the way back into 2009, and I'm going to outline 4-year cycles. This is a 4-year box, that's a 4-year box, another one, and there you go. So really, we are on the 4th 4-year box, meaning that Bitcoin is not even 16 years old yet. You're just a little baby. So I'm going to break these apart individually so you can see the characteristics that happen every 4-year cycle. The first one was from 2009 to 2013. So as I mentioned earlier, Bitcoin in October of 2009 was trading at 0.000099 cents. I wish we all would have bought just $1 worth. $1 worth of Bitcoin, you'd be a millionaire. Crazy to think that. But there's your 4-year price cycle in the red box. You can see that it peaks on the very hard right edge of this chart. There's your halving, which happened November 28th of 2012. And what I want you to focus on is after every halving, notice there is a surge in the price of Bitcoin shortly after. A couple months later, you see a really big surge up. Now, this ultimate run from bottom to top for Bitcoin from 2009 to 2013 was a monstrosity. 117,474,647%. I wish I could say that I bought some in 2009, but I can't. So forget about that one. Let's move on to the stuff that we may have traded or could have traded, and that is the 2013 to 2017 window. This is when I got started in Bitcoin. Now, here is our 4-year window. All right, well, we're mapping out this 4-year cycle. Notice on the hard left side of the chart, it had a big surge up and then fell. Bitcoin fell 86% over the next 14 months. And this is another recurring theme. What you'll notice is the first year of the 4-year cycle, there's a very sharp decline. It lasts roughly 12 to 14 months. Then you get about a year of sideways to slightly up. And then the last year of the 4-year cycle is parabolic exponential growth. And you'll see what I mean here in just a second. So there's your 86% slide from 2013 to 2014. There's your halving, which happened in 2016. Notice the big surge shortly after that. And then ultimately off the bottom to the top, that was a 12,804% move for Bitcoin. I was very fortunate to be a part of that one. But wait, there's more. Our next 4-year cycle starts in 2017 and goes to 2021. Again, same thing. That first year, it fell 84% in 12 months. Then it went sideways for a little while until we got to the halving on May 11th of 2020. And then went parabolic yet again. And that move was an astounding 2,109% off of those lows. Which brings us to the path ahead. The drum roll, the moment that if you're still here, congratulations. But the path ahead is really, where is Bitcoin going? Now, I could spend hours going into all of the minutia and little details of why I think it's good, why I think it's bad. There's definitely some pros and cons to Bitcoin. But let's just get on with the show. Based off of supply, demand, adoption, and destruction, where might this be headed over the next couple of years? So I'll start you off with a curve, if you will, for our current price action. And that curve is down. Here is Bitcoin, not for 4 years, just for 2. This is where we are right now. In 2021 to 2023, we saw a very sharp slide in Bitcoin's value, 77%, and many still feel that we're not done. However, the slide we saw for the first halving was 14 months, next one was 12 months, and this one was 12 months. So it seems about right that we bottomed out. But in order to understand where it's going, I have to zoom out, and I have to zoom out a lot. So there's that same chart. You see the 77% slide. What I expect is that price will move sideways to slightly up for the next few months until we get to drumroll please, the halving in 2024, which should happen the end of April or early May. They're expecting May 1st. From that point, I expect there to be a sharp rally up because history has done it over and over and over again, literally done it 3 times on Bitcoin. So what would that do? The dotted red line is the low end forecast, which would be a 1,000% gain based off the historical data. Now remember, we've had a 117 million% gain, a 12,000% gain, a 2,000% gain. So I think 1,000 would be rather logical here. That would put it about $176,000 per Bitcoin by November of 2025, which is where it should peak. However, what if we got the same number, right? The same as last time, a 2,000% gain. That's the blue line here. And that would put Bitcoin at a stout $326,000 per Bitcoin at 2,000% gain. And I know what some of you are thinking. You're saying there's no way it could get to $326,000. It'd just be way too big of a market cap. It's too big. It can't get that big. Well, look at it this way. Apple is a $2 trillion market cap company, and it provides products and services. However, Bitcoin is digital gold. It's a digital currency. And if we get adoption globally and people start buying little bits of it, you don't have to buy a whole Bitcoin. You can buy a Satoshi, a very small fraction. The price could really start to skyrocket here. And if we got to $326,000 per Bitcoin, the market capitalization of the whole Bitcoin ecosystem would be 6.8 trillion. So it would be triple the size of Apple. And I think that that's actually rather logical and possible over time if it starts to gain adoption as a currency, if central banks start holding it and companies start holding it on their balance sheet. Absolutely could get to those lofty, crazy levels. Now, personally, I think we're going to find somewhere right in the middle here. My goal and expectation is that by November 2025, which is the end of the 4-year cycle, we will see Bitcoin at roughly $250,000 per coin. Now, I know, again, a lot of you think that might be a very, very high number, but is it really? If the global community is using this now as an alternative currency payment system, right? It's not just, oh, I'm using the yen, or I'm using the pound, or I'm using the dollar. I'm using the Bitcoin ecosystem, and that's universal. That's one of those marketplaces where any country, any person from any part of the world can now be sending money without having to go through traditional banking channels. That makes it faster, more efficient, more transparent, and it makes more inclusion to the global community with a major financial network. Now you couple that with Starlink, which is this satellite network that Elon Musk is creating, which now gives everybody access to the Bitcoin network in any part of the world. Now, all of a sudden, this fosters an adoption. I think that actually getting to a price of $250,000 by November of 2025 might be even a little short, but that's my target. I know it seems crazy, but when you look at the stats, you look at the facts and figures, you look at historical price action, you look at adoption, you look at demand, you look at destruction, there's a lot of factors here that make it very bullish on Bitcoin. The big red flag will be government regulation, and if they come down too heavy-handed on Bitcoin. I don't think that they will, because what you saw with Coinbase is by coming down with too many regulatory pressures on a business, they'll simply leave the United States and go elsewhere. And that is major loss of tax revenue, jobs, and certainly makes us start to fall behind in the race to be the leader in digital assets and cryptocurrency. That, my friends, is the future of Bitcoin. Hope we'll see you again soon.